Welcome back to another market closing live stream. Oh my gosh, today we've got some mega earnings. And when we talk about mega earnings, we don't mean small, we mean massive, huge earnings today. Amazon, 4 o'clock. Apple, 4:30. Roku, 4:05. Intel, 4 o'clock. Robin of the Hood, right at 4 o'clock. We get Western Digital at 4 o'clock. Zendesk, 4:15. Folks, Columbia Sportswear at 4:05. This is the earnings day of earnings day, after, of course, Tesla. Anyway, crazy day in the markets. Obviously, if you've seen the other videos already, which if you haven't yet, highly recommend you watch them. A, my recession reaction, B, the now video, and C, the Tesla video. I think very critical videos to watch. But in the meantime, let's get ready for earnings and take a check into how the market is closing. Of course, keep in mind this video is brought to you by StreamYard, which is that amazing streaming platform I can multi-stream with and throw out comments like this one from Cole, who says we're about to have an SH9T show. So let's see how the show goes. Anyway, let's start by, just some basics here. Basics. This is our fourth bounce now off the 0% Fibonacci line. Not only is this the 0% Fibonacci off or the fourth bounce off the 0% Fib, but we are doing a little bit of selling into the close, which does imply institutional selling. You generally have those institutions selling and transacting or buying, whatever they're doing, first thing in the morning, last thing of the day. These things get entered in for the day's decision and then processed. That's obviously excludes intraday traders, which is entirely possible as well. There's intraday trading at institutions. It's not just possible, it's exactly what happens. But in terms of larger funds, active, passively managed ETFs, beginning of the day, end of the day, folks, very important. So not a surprise to me that the last 30 minutes of the day, you see a little bit of sell down. It's also usually when day traders close their positions, given that today we had long direction essentially, which is up. We have a little bit of selling pressure going into the closes. People are probably trading out of positions they may have opened today on the way up. So quite interesting in terms of I would call it a very risk-on day here. Let's just go ahead and sort by losers first. So TDOC, obviously, disappointing growth, terrible, like insane, absolutely insane. Impairment of $6.6 billion with just no explanation other than, market values have gone down. It's like, what do you have on your balance sheet? Like, what's wrong with you people? Anyway, down 40%, quite disappointing. Blue Apron, stay-at-home food company, down 12%. Well, that almost makes me feel like maybe they had some sort of announcement or earnings, because Blue Apron has been occasionally a little bit of sort of a momentum stock. So not necessarily, because you have seen momentum in it, but I haven't seen it recently. So 12% there could be some form of a catalyst, either earnings or pre-release of earnings. Who knows, whatever. Let's get logged in over here. Okay. We are going to have earnings set up for today, and that comes up in about 10 minutes. Domino's Pizza, missed a little bit this morning, so we see them down. Spirit Airlines, interestingly, even though the travel sector is just booming, yet Spirit Airlines down about 2% right now. Bed Bath, Cost, Boeing, Caterpillar, Enphase 0.5%. So not all stocks winning here. Tesla down about 0.2%. Disney down about 0.3%. Looking at the winner chicken dinner side, it's basically all of the earnings yesterday. Look at that. Yesterday we had earnings from Upstart, Qualcomm, PayPal, Pinterest. No, it wasn't Upstart. It was Upwork. Sorry. So Upwork, Facebook, Pinterest, PayPal, Qualcomm. Those are the ones that had earnings yesterday. These five right here, all of them booming right now. Now, that doesn't mean everything that reported yesterday is doing well, but the leaders today are definitely these. But look at this as well. After those Qualcomm earnings, finally you get NVIDIA popping back up 7% intraday. It was at a low today of, where'd you go? Here we go. We were down to 184.9 this morning. Really incredible. Then United Wholesale Mortgage also up about 7%. Wayfair, Autodesk, incredible. Trade Desk 6.5%. Affirm 6%. Look at this thing. This morning was at a low of 28.50. Absolutely incredible. So wild, just absolutely wild market. Now, next up, obviously, earnings. What's going to happen in earnings? And is it going to crash us again? because it's entirely possible. It is 110% entirely possible that if we get terrible earnings or terrible guide, which usually you don't end up getting guide from Apple, but if these things come in terrible, then we're gonna have some pain. So not so great. Anywho, so we'll see what happens now. Now I think we're on standby. Let's take a brief listen into CNBC here, and then we'll see what the suits are saying. Let's listen in.
By the way, I think they're doing the right things. Don't get me wrong, but we won't know if it's going to have any success at all. Like for years, like even if you liked it, what's your rush?
So what is that? So what would you be looking for on a shorter term basis, like quarterly numbers coming out in a few moments?
Yeah. I mean, look, people will be watching to see, like, obviously just on the financials, the gross margins and capex and everything. They'll be watching the PC trajectory and whether or not they change their tune. And data center is going to be hugely important because, like I said, they did actually push out their roadmap. But in the near term, there's been quite a bit of flutters about some product delays. They've got a new server chip coming this year called Sapphire Rapids, which seems to be getting incrementally delayed like the longer we go. And so people are going to want some color on that. And so we'll see what they say and what that means like for the year. But I'll be honest with you. Fundamentally, if you own the stock, you're not, like I said before, you're not owning it for this quarter or next quarter, even the quarter. You're owning it because you think, over 5 years they can turn it around. And whatever happens on this call today, it's not going to.
I like the kids screaming in the background. Yeah, all right, whatever. She comes on CNBC to tell people to hodl for the long term. Right, okay. So old news. 5-year break even right now, sitting at about 3.4. It's actually moved up a chunk. Now, it's sitting right around the levels that were the lows of early April. We were substantially higher on the 5-year break evens in the bond market in March. And even towards the end of April, we had a pretty excited run there. That's really relaxed, which is really good to see. We want to see a relaxation of that 5-year break even, but we're not as low as we were over the last couple of days. Had a little bit of a boost there in inflationary concerns, which always is a concern that when you have negative GDP at the same time as potentially inflationary concerns, that you're going to run into some form of stagflation. Quite terrible. Yeah, so somebody's wondering where this thing is from. My dad gave this to me, so shout out to my dad, but it's from Paul Graham? Robert Graham? Paul Graham or Robert? I can never remember what it is. Robert Graham. Anyway. Okay, so talk 10-2, talk break evens. Let's take a look at what El Sutos are saying. Currency volatility has some duration. Tesla goes green. I don't actually think it's green anymore. I do think it went green for a brief moment there. Yeah, it did. Yeah, geez, what? Look at that crazy price action today. Briefly went green there to get back over the 880 line here. Really incredible price action. I mean, look at the TA here, folks. This is insane TA, in my opinion. Here, let's go to 5-minute because it just really showcases the power of TA to you. So we get a downtrend, right? Get a downtrend in the stock on the 18th. I mean, we did this. Look at how many freaking times we hit this. This is insane. Anyway, so look, let's go from over here. Okay, so to all the TA deniers who are like, yeah, I don't use TA. Well, first of all, you should definitely check out the coupon code link down below and get yourself some perspective. But anyway, take a look at this. 61%, we ride the line over here on the 5-minute chart. Fall to 50, bounce off of the 50, get sort of this rebound action over here right above the 50. Try to ride back to 61.8, get rejected at 61.8 on the 14th. Drop to 50, again get rejected by 61.8. Again get rejected by 61.8. Bounce off of the 50. Try to climb, actually almost break out. And then when we come back, just a few days later, what are we bouncing off of again? 50. This break was not great. When we broke the 50, we went straight down to about this 880 line, which we frequently bounced off over here. Bounce, bounce, bounce. This is a near bounce right here. And sometimes you get the little overextends as people trade early, right? And then, of course, when we had the breakdown and we fell straight through our 880 support, what happened? Boom, bounce off the 23.6. And now we're riding over here. I mean, it's almost like, I don't know. I feel like you couldn't ask for more perfection in terms of sticks here. So really, if you don't have these levels, I think they're levels that you really want to pay attention to, because the reason it works is it's not like some fancy magic. It's because other traders are trading off of exactly these things, right? Anyway, so what else? Currency volatility levels are at post-pandemic highs. You name the headwind, it's pressuring industrials. Crude pops as Germany says it's no longer opposed to a Russian oil ban. Stocks brush off GDP miss with some good reason, surging imports. Yeah, U.S. consumers very strong, in other words. All right. If Ford was able to hide Rivian losses and make her look good, Amazon's going to do much better. Yeah, we'll see. Those losses will definitely show up, those Rivian losses. But anyway, we've got about 3.5 minutes left in the day. Looking at the QQQ, really giving up a chunk over here into the close. We were up almost 4% intraday on the QQQ. Almost. That just potentially set up for a buying opportunity tomorrow in case we get some nasty misses, or it sets up for a buying opportunity right now, which is entirely possible if you think about it, that you're buying relatively close to the 0% fib. You're getting end of the day selling pressure, super common when you've got institutions dumping. So we're really not losing much. I mean, we're giving back, 0.5% here. Yeah, hopefully this really starts setting off another rally. Is this a bear market rally? Maybe. I mean, who cares? We've had bear market rallies frequently bouncing off of the zeros, right? I mean, look at that. You could call that a bear market rally. This clearly bear market rally. You could call that a bear market rally. You could call all this over here bear market rallies. Doesn't mean that when you're close to 0%, you can't go lower, but also doesn't mean that you should not be adding, getting more exposure to some of your favorite companies during these periods of just insane fear and uncertainty. I think is the whole point. Absolutely powerful. So anyway, gotta hit that COVID hit me. I might have to get a monster. That's all right. So we got to make it to earnings. Ooh, look at that. Google's up 3.69% today, up more than slightly more than the QQQ. Tesla vacillating around that 0.5% down. Looks like a lot of that selling pressure was really completed early in the day. So we'll see how it closes. Couple minutes to go here. Disney unveils same-sex kiss in upcoming movie. Oh, no. I don't know. It just seems like no big deal. That's cool. But I don't know. I'm wondering, why is this news? But anyway, so what else? Okay, so 1 minute to go to the close. We've got. Let's take a listen into CNBC here, and then we're going to do earnings. I'm going to get them ready.
To the downside. Look at the 5-day S&P 500, because this kind of tells you a little bit of what I was mentioning there. For basically just popped back up to where we were at the Monday close. So, there's work to do here, but you could also say that that's carving out a low. We spent a lot of time near 4,200, didn't really decisively break it yet. The volatility index, as you would expect, coming in pretty hard. We're now below 30, so you want to see that spike continue to slide lower. But again, it's wait and see.
I think with the Fed in quiet period, earnings narrative takes over, and there are a lot of good ones, and that's evidence in the market today. As we head into the close, best performing stock in the S&P right now is Meta. After earnings, it's up 17.5%. PTC on earnings, PayPal on earnings, Qualcomm. That's at the top of your list today. There's the S&P up 2.5% right now. Every sector is higher. Technology is the leader, up 4%. Communication services finally having a good day here, up 3.25%. It's been a pretty brutal period. It's a group that's about 30% off its highs. Energy's working, discretionary's working, pretty much everything. Financials having a good day. The NASDAQ closing out with a gain of 3%. So really a strong comeback today. The S&P 500 with 2.5% brings it positive for the week. That's it for me on Closing Bell. Send it into overtime with Scott.
There you go. All right, here we go. Getting ready now for Amazon, getting ready for Apple. We've got first up on deck is going to be Amazon. Then we've got Intel, Robinhood. Amazon, Intel, Robinhood. They are first to come. So let's make sure we have all of these up. We got them up. We're ready. And then we'll go to the tickers as they come through as well. Amazon, Apple. Roku comes in with a revenue beat. 733 mil versus 720. There's our first one. Roku in, up 5% already. Look at that. 733 versus 720 was the expectation. Waiting for more information. No Amazon. Intel comes in with 18 billion versus 18.46. That's a miss on revenue. Intel comes in with reaffirming guidance. Intel comes in with adjusted EPS of 87 cents versus 80 cents. So it's a miss on top line, but a beat on bottom and a meet on forecast for Intel. So a little mix there in Intel. Robinhood. Oh, damn. They're not a good one, man. Robinhood misses estimates, coming in 299 million of income versus 352.9 expected. Cumulative funded accounts, 22.8 million. The estimate was for getting to 23.1 million. That is a miss of about 300,000 on users. Revenue coming in almost 54 million shy. You've got, let's see here, crypto revenue comes in at 54 million versus 56 expected. That's less. You've got estimated monthly active users at 18.2 mil, but actually they only had 15.9 million active users. So if you are watching this right now and you're not grabbing or you're not trading on Robinhood, you're part of the reason. Amazon down 9% after quarterly, working through supply chain issues, inflationary issues. Oh my gosh. Okay, what? Sees second quarter loss of $1 billion. This is the forecast to a profit of $3 billion. They were expecting a profit of 6.8. So their forecast is horrible. This e-commerce forecast is very, very bad. Profit of 6.8 billion expected, but actually forecasting a loss of 1 to a gain of 3 billion. That's terrible on the forecast. Amazon AWS sales, slight beat, 18.44 billion, slight beat. You've got subscription services, that's a slight miss. Operating margin, 3.2% versus 4.7 expected. That's a miss of 1.5% or 50 basis points on operating margin. That's bad. Physical net sales, 4.59 billion, up from the expected 4.3. That's good, but that's not where the money is. The money's online and AWS. North America sales actually come in with a beat at 69.24 billion versus 67.8 billion. So people are spending the money, but they got destroyed on margin here. They lost 150 basis points. They're down from a margin of 4.7% operating to just 3.2. That's terrible. Like, what's the point? It's such a low margin. And I know they spend a lot of money, investing in the business, but holy crap, there goes Amazon. That is going to be a drag on the indices tomorrow, folks. That is not good. Immediately seeing Trade Desk drop 3% here in the afters. Google down 1%. Roku first moves up, now down 8.4%. Complete disaster. Roku, I don't know what's wrong with Roku. They actually beat on revenue, so there has to be some kind of skeleton in the report that came out here. Robinhood's going to start reporting stats on a monthly basis because these numbers are so disappointing. They want to give us disappointment monthly now to kind of soften the blow a little bit. OMG. Wow, this is a horrible miss there from Amazon. I don't know how much of that is Rivian yet. Okay, no longer chasing physical or staffing capacity. Okay, got it. But that forecast was so trash. Even Q1, what? Q1 loss per share of $7.56, but their EPS was estimated EPS was $8.40. What? So they lost money instead of making money? Robinhood revenues fall 43% as trading volumes moderate. OMG. Holy crap. Roku's now down 14%. Amazon down that full 8.23%. Trade Desk down 2%. PayPal down another quarter. Facebook down 1%. Pinterest 1%. A little big give back here makes sense. Roku, just a disaster right now. NASDAQ setting up for about a 1% loss already. SPY setting up for about 1/3% of a loss. That is a disaster there at Amazon. First quarter net loss included, let's see here. No Rivian talk yet. Okay, I want to see what's going on with Rivian. Remember, Apple is coming out in about 25 minutes. Roku sees net revenue. Oh, the forecast ruined it. Roku revenue beat this quarter, 733.7 versus the estimate of 720.5, right? We talked about that already, but the second quarter net revenue coming in at 805 versus 826 million expected. Ouch. That's a burn. Definite miss there on forecast. You've got, yeah, monthly active users at Robinhood down 10%. Now sees year operating expenses of stock, excluding stock-based compensation, up 2 to 5%. So they're spending more money on employees as well. Amazon recovering slightly now in the post market, sitting at about a 7.5% loss right now. Roku adjusted EBITDA forecast expected to be 21 million. Now projecting 0. Projecting to break even. Oh, gosh. Yeah, none of these are good. Western Digital margin coming in at 31.7%. That's a beat on over 31.1. You've got Western Digital Q4 rev expected to be about 4.6. That's in line with the 4.6 bill that they forecast. That's for Q3 for the next quarter, for their fourth quarter. Q3 net revenue was 4.38 versus 4.31 expected. Operating expenses roughly in line. Margin a little lower. First Solar. Okay, here we go. First Solar. Oh my gosh, it's horrible. What the hell happened? First Solar net sales 367 million, folks. The estimate was not 367 million. It was 592.2. Holy crap. That is a miss of about 38% in sales. How? How do you miss that badly? Who's doing your forecasting? Really wide guide. Woo. Let's look at First Solar. FSLR. They're actually green. Bah! You gotta love it. It's such the most confusing market ever. Western Digital sees operating expenses in line with estimates. Amazon sales show slowest growth in years. Ooh. Wall Street Journal. Amazon reported growth of 7% in its first quarter. The slowest growth Amazon has had in about 2 decades. Oh, why did that disconnect? I'll fix it. I'll fix it. Oh, there it is. That's crazy. Wow. So much for Amazon under 3,000. The thing's like 2,600 now. I mean, Google's about to be more expensive than Amazon. Ugh. Wow. Yeah, I'm sure Amazon included Rivian, but it wasn't like broken down on the preview here. Let me see if I could just click on it. Yeah, they were expecting a gain of $8.36 per share, and they came in with a loss of $7.56. That's bad. And remember, these are all numbers from before. Like, these are numbers from January to March. Let's see if I can get into Amazon filing. Let's listen in the CNBC for a second.
Based revenues down 48% year over year, led by a 73% drop in equities, crypto, and options also lower. Really tough comps here, of course, given the meme stock mania that unfolded in the first quarter of last year. Net cumulative funded accounts did increase to 22.8 million. That's up 27%, primarily driven by cryptocurrencies, the company says, and up 22.7 in the last quarter. So a gain of around 100,000 accounts, although they did see monthly active users decrease by 10% for this quarter. And you're looking at shares of Robinhood reversing today's gains, down about 8% here in extended trade. And of course, it's been a tough couple of months.
Whoa, you want to know why Amazon went so dark? Rivian, at least part of the reason. I got it. That's crazy. Net loss was 3.8 billion in the first quarter, compared with net income of 8.1 billion in the first quarter of 2021. First quarter 2022 net loss includes a pre-tax valuation loss of 7.6 billion from our investment into Rivian. Wow. Wow. Yeah, that is gotta go on Twitter. That's so crazy. Amazon loses $7.6 billion in Q1 2022 from investing in Rivian. Well, I mean, I guess that's recognizes a lot, or well, it's not really recognizing. It's just they mark to market, right? Is what they're doing. Amazon reports loss of $7.6 billion in Q1 from investing in Rivian. Yeah, there we go. That's true. Wow. Okay, let's listen to the Amazon talk.
Online stores as a whole also came in less than the street was expecting. Also, I want to flag subscription services because remember, Scott and Dan, that Amazon raised the price of its Prime membership last quarter. That was also light, coming in at $8.4 billion. 8.6 is what the street was looking at. Advertising as well. I mentioned this is the metric that they recently broke out. Higher margin business like AWS. That was also a little light. 8.2 was expected, coming in at 7.9. Growth still of 25% year over year, but you see that mix. Cloud still very much that bright spot.
All right, Dee, thank you. You have a reaction to that? You want to answer that directly?
I mean, cloud is the ultimate key to the store. I mean, very similar.
But it's slowing, right? Growth is slowing.
Yeah, but relative to the numbers, if you look at what's happening on cloud, we are still, relative to what people expected, that they thought it would decel significantly. It shows you combine that with what we saw with Google and Microsoft, the digital transformation cloud story across enterprise is robust.
Imagine if everybody who invested in Amazon canceled their Amazon Prime subscription as like frustration for the stock going down. The stock would just end up going down more next quarter, assuming there are that many shareholders. But anyway, I don't know. Just being a little nonsensical. Stop being silly. All right, what other earnings do we have here? Intel beats but misses on guidance. Oh yeah, okay. Well, we talked about that. That was a slight beat, did we? No, I don't know. So it's 18 billion in revenue. Expected was 18.46. Their margin came in at 52% as expected for the fiscal year gross margin. All right. Yeah, actually, the Amazon report didn't suggest that consumer spending had gone down. Let me go back to it. It mostly, it seemed like it was honestly the loss. Well, I can't say mostly. Obviously, they still missed too. But a substantial portion of their loss was Rivian. But let me see here. I'll tell you. Let's look at it again. Okay, so the Q2 net sales forecast missed, right? And that was a $116 billion guide versus 121 to 125. Yeah, I guess. Net sales miss. How much do they miss? I don't think their guide was about 123, coming in at about 116. That's a miss of, yeah, okay, all right, 5.5% drop in sales. That's still something. That's true. You're right about that. Let's listen to what they're saying about Roku. Remember, they went up first, and then they went straight down.
3 million, the addition of 1.1 million active accounts in the quarter. And Scott, just because we have been talking so much about supply chain disruptions, just want to point out here that they note that ongoing supply chain disruptions contributed to increased U.S. TV prices, resulting in industry-wide TV unit sales that were below 2019, and that their player unit sales remained above the 2019 levels, but were still down 12% year over year. So they are feeling the pinch there as well. And we see shares are pretty much flat.
They're flat because, as you're giving this report, Julia, and I'm so glad that it's you doing it because you cover Netflix as well. And all I can think about is this more evidence that it is a Netflix specific issue that was affecting Netflix when you hear these kinds of numbers? And if you want to go anecdotally from others too, maybe you can come away with that conclusion. What's your own take?
Well, look, I do think it's interesting just to dig into this report here. They note that year over year, net ads moderated given the end of government stimulus payments that served to temporarily drive discretionary consumer spending in the first quarter of 2021. So I think it's worth noting that they are facing some of these macroeconomic issues as well. But also remember, Scott, that Roku sold off so much in the wake of those Netflix earnings results. There was so much concern after Netflix's earnings that it could be just a bloodbath for the rest of the streaming sector. I think we are seeing some of these other pressures, but Netflix is unique in that it was a first mover and it is so much more saturated than the rest of these players, and also doesn't have the ad-supported business, which helps moderate things a little bit.
It is, I mean, look, when you look at the stock.
Someone here says Amazon's guiding to a potential $1 billion loss next quarter. Makes sense because Rivian so far in April, the first 4 weeks has gone down more. So that does make sense.
Stocks have come down as we're looking at the numbers and looking for the reaction and, seeing what's what and saying, this thing was almost $500 like Netflix, which was like $700 not that long ago.
Well, I think that's why you have to also look at have and have nots in terms of tech. You're starting to see a picture now painted. Enterprise, software, semis, strong, not slowing. Consumer, work from home, pull forward, slowing. And I think what's important in this bifurcation, I think you see it today in terms of tech and the Qualcomm numbers as well. You're starting to see that fork in the road for tech. But what I do believe leads tech higher is cloud, it's soft, it's semis. And what we saw here, even on the Amazon number, that's important for the broader tech sector.
Do I need to be worried? You mentioned consumer being weak as it relates to tech. Do I need to be worried about what's going to cross the tape in a matter of moments? AAPL, better known as Apple.
Yeah. Look, I think Cupertino, even despite what we're seeing on demand as well as on supply, overall on the consumer side, I think it's a beat in terms of iPhone numbers. And, you take out about 15 million iPhones that really get stripped away because of the supply issues. That continues to be a Rock of Gibraltar stock. And I believe that print is going to be important, not just in terms of on the supply side. Demand. Are we continuing to see demand on iPhones? That's a telling tale.
Yeah. Shannon, you want to give me your read here now that you've had a chance to see these numbers come out? You've heard the analysis from our own experts. What's yours?
Yeah, I think the Roku story is particularly interesting because I think you touched on a really important point, being an owner of Netflix, as you know I am. I think that the direct-to-consumer story is fully intact, cannibalizing each other. And so it actually speaks to Roku being successful going forward because you are going to have a number of these streaming apps. The other thing I would mention is just if you think about what we're seeing from a consumer perspective, it's how the consumer is spending and what they're spending it on. And I think it sort of speaks to this transition over to services. And so it'll be really interesting to see these numbers come out in other ways later in the quarter in things like apparel as we determine if there's actually this shift from goods to services spending against that.
Right. That shift from goods and services, or shift from goods to services, a big thing that a lot of folks have been talking about. But really, it's usually only about a 2% shift in GDP. But anyway, reports coming in that Amazon drops 10% on earnings after being slammed by Rivian stock decline, and inflation exposes risk of low margins. Although sales of the cloud computing business jumped 37%, the challenge for Amazon will be to retain its workforce, whose compensation is largely tied to Amazon's stock price. If investors sour on the stock, keeping customers happy with a money-losing business is a dangerous proposition if it compromises employee compensation. Amazon will have to convince investors the money-losing quarters will only be temporary and will be able to make its network more efficient and cut expenses. Ooh. All right, let's see what they're saying about Robinhood.
Scott, in the last couple of weeks, what have I been buying and talking about on halftime? I've been buying names like Walmart. I am not going in. I'm not looking at names where the high P valuations have been present for many years. They benefited from the pandemic and they've fallen so dramatically. I just don't think those names are coming back anytime soon.
All right, I want everybody to stand by because we do have Apple earnings on deck. The company out with results in just moments. We're going to take a quick break. We're going to get set up for all of that. Plus,
yeah, when they say just moments, it's like 8 minutes and 30 seconds. Yeah, exactly. I always wonder, why does Apple have to make us wait? Come on, Apple. You suck. They always want to be special. Although so does Berkshire Hathaway. They do earnings on like Saturdays. Kind of crazy. But maybe it's a good thing. Gives people a chance to read it.
I mean, based on what Secretary Mayorkas is saying, they're already starting to do it. My worry is that they've learned to use this through executive order to tell the press and the search engines, the Googles, the Alphabets of the world, hey, you can put this out. You can't put this out. Don't prioritize this, prioritize that, because in the world of Alphabet, you can go and make sure that nobody ever sees that website. Even though, yeah, it's still there. You can still find it. No, you can't. If you're not in the first few pages on your Google search, nobody's going to find you.
So is this Soviet-style disinformation board, is this a response to Elon Twitter?
Good old information board. I love how you go to Fox Business and it's almost always politics. Oh, well. So let's take a look at some of the price action here while we wait for Apple results on deck in about 7 minutes. Affirm popping up a little bit right now. So it's actually Amazon. Look at that. Amazon recovering a bit from its fall over here. Is that by the dipping? Let's go to Roku. They started going up. Yep. Look at that. Okay. So that's not so bad. It's like getting slightly better, maybe. Unlike Robinhood. Golly. Down at 929 right now. Is that all-time low? Oh, wow, it is, folks. Wow. Charted all-time low is 926. It was at 905 at a low point here. Wow. Yeah. Roku, average revenue per user over 12 months, $42. So if you use Roku, they make about $42 off of you and 91 cents over 12 months. All right. I mean, I guess that pays back for a computer at some point. Roku sees Q2 net rev estimate. Yeah, that was 826 and it came in at 805. That was the issue. I want to see if they're still going to do the in-house manufacturing of TVs. I think that's a terrible idea, like getting into the TV business. Ugh. If Robinhood goes bankrupt, will funds be forced in danger? Yeah, so you get what's known as SIPC insurance that covers you up to $500,000. Yeah, if you have more than that in Robinhood, you're reliant on Robinhood actually paying its obligations and doing the right thing. Unless they lose it all. YOLO options for Robinhood. Okay. Yeah, that's not. All right. We're now 5 minutes away from Apple. Let's listen in for a little bit longer.
Can we put to rest the idea that you should buy a stock strictly because it splits? Because March 9th or 8th, when they announced it, the stock ran and popped right to 2,900. People were buying it on that basis, and here we are.
Let me correct something that I said as well. I think I said that Intel missed, and that was the reason why the stock was down. They actually beat. It was the guidance that was weak. So I just want to make sure everybody is on the same page, including me. So that stock, as we show Amazon, is 8%. Dan Ives, the split. Mike brings up a great point. But what happens now? It's all about sort of whether you've opened up the playing field to more players.
No doubt. I mean, look, you're not buying a stock because it splits. And as Mike talks about, obviously from a retail perspective, we've seen that, especially with big cap tech. But ultimately, it just shows fundamentals are going to dictate where stocks go. But when you look at what we're seeing with the stock splits, that becomes a high-class problem because they are splitting because ultimately, during the pandemic, the strong got stronger. That's why we're seeing here with stock splits across the board.
All right. We are just moments away. We'll be back with Mike Santoli, obviously, before the end of the program. Apple's numbers expected to hit the tape in just a few moments. We're going to take a quick break. We're going to come back and get you set.
I don't have a quick break.
Gave $122 billion to the Department of Education. The argument.
Whose ad is better? The education ad right there, or the pitch that if you want to stream, multi-stream if you wanted to, and you want to throw comments up on screen or use banners, make sure to check out metkevin.com/StreamYard. And thank you to our sponsor, StreamYard, for today, metkevin.com/StreamYard. Woo! Okay. 3 minutes. 3 minutes, and we'll have Apple. Let's talk a little bit about the Apple forecast. How about that? So let's see what Apple is forecasting. It's going to be a big deal. Stimmy money was never going to be permanent. Why do you think companies expect such high returns? Yeah, well, sometimes people have a misimpression of, what earnings are going to be. That's not only about companies, but also applies to humans. Some people are a little entitled. All right, so we got a 6% implied movement on Apple, folks. Holy moly. You have a forward 12-month PE ratio of 26. It's actually not that bad. I mean, if we take 163 divided by 26, it's about a forward PE of about 6.27. That's actually not bad at all. Wow. That's great. Oh, well. Anyway, they're expecting, this is the number you're going to look for, okay? They're expecting $93.8 billion of revenue. Here, you know what? We'll write it down. $93.8 billion revenue. Apple expectations. And we've got EBITDA of 31.35. EPS adjusted and GAAP, both of them, 142. Okay. There you go. All right. 90 seconds left for Apple. Let's see if we can beat, what's it called? CNBC. I love beating them. 1 minute. All right, let's listen.
Price target. Most important thing, China, and China.
Look, China is the key of the story from production as well as from a demand perspective, but also services.
I do not think China's going to do well.
The key here
for Apple, Chinese revenue, right?
By about 15% for Apple. Cook, of course, on the call, we'll talk about supply chain. That could ultimately be cautionary in terms of the guidance. But ultimately, like I talked about, I believe this continues to be a bedrock name and ultimately will lead tech higher.
The big technology founder, Alex Kantrowitz, is with us as well. He's a CNBC contributor. And again, take a look at Apple shares ahead of the report.
I misspelled EBITDA on screen. It says EBITDA. Whatever. Y'all know what it is. All right, folks, 8 seconds. Come on. Let's see it. Let's see a bigger number than wait, no, I thought it was 93, not 23. Anyway, I'm pretty sure it's 93 was the right. Apple Q2 sales 97.3. The net was 25. It's a double beat, top and bottom beat. iPhone beats. by over $1 billion of a beat on iPhone, 50.57 bill. Mac revenue beats by over $1 billion. Services revenue beats by a fraction, but it's still a beat. Chinese revenue up 3.5% year over year. Wearables slightly down, fraction down. iPad revenue beats. Holy crap, Apple. Don't bet against Apple. Oh my God. Wow. Rest of the Asia Pacific region, 7 bill. I mean, it's a beat across the board. Everything beat. EPS comes in at 142. I'm sorry, 152 instead of the 152 we wrote down there. This is incredible. And I meant to write 93 billion there, but I wrote 23 billion like a dummy. But whatever. Wow, 97.28 billion versus the estimate of 93.8. This is really good. Wow, I can't believe these companies just keep printing. Apple in the after hours now sitting about 3% up, 3.7, 3.8% up, sitting at about 169. Holy moly. So what else here? Board authorized increase of 90 billion to share buybacks. Wow. I mean, this is awesome. Watch, it'll end up going negative tomorrow. But that's really cool. So, board dividend, 23 cents. The estimate was for 24. EPS, yeah, we talked about EPS. iPhone beat, Mac beat, service beat, iPad beat. Wearables was the slight miss. Apple stock outperforms competitors. Yeah, well, duh. It's insane. I'm gonna scroll through the actual earnings stock myself. But yeah, this is a really, really good move here. Hell yeah. This is good for the market. Apple, this quarter record results are a testament to Apple's relentless focus on innovation and our ability to create the best products and services in the world. We're delighted to see a strong customer response to our new products, as well as progress we've been making to become carbon neutral across our supply chain and products by 2030. We are as committed as ever to be a force of good in the world, both in what we create and what we leave behind. We are very pleased with our record business results for the March quarter, as we set an all-time record for services and March quarter revenue records for iPhone, Mac, wearables, and home accessories. Continued strong customer demand for our products helped us achieve an all-time high for our installed base of active devices. Our strong operating performance generated over $28 billion in operating cash flow and allowed us to return nearly $27 billion to shareholders during the quarter. Wow, that's insane. It's just so good. Such a good earnings release. Okay, so looking at the actual report, we've got product sales 77 versus 72 billion from last year. Services sales 19.8 versus 16.9 last year. Wow, incredible. R&D also up 6.3 bill versus 5.2. Really, really good. Apple CFO says Mac is doing incredibly well in spite of supply chain challenges. We now have more than 825 million iPad customers across the services platform. The war in the Ukraine has affected March, and it will affect more during the June quarter. Okay, so there will be a hit from the war, we would expect. And a bigger hit in the next quarter, unfortunately. And they don't generally give much guidance, but I mean, that's a little bit of a tell there. Stock only up about 2.2%. Not a surprise. Apple doesn't do guidance. That's the most you get from Apple, is them saying that about the next quarter in terms of Ukraine impact. They give you the bad. I guess that's all right. That's fair. This is really good. Yeah, they killed it. Really good report. Okay, well, I like that. I mean, Amazon got hit by Rivian. That okay, whatever. Sales went down about 5.5%. Their forecast went down about 5.5%. So that's not, I mean, it's definitely something, but we've kind of been expecting an e-commerce relaxation, right? And, stay-at-home stuff, not a surprise. You can see some of the pain has already left the market. This Apple beat, I think, really helped here. This is a really incredible beat. Look at that. QQQ and after hours already popping back up. So, wow. Really, really incredible. Well, there you go. You know what? If you're an Apple stock, make sure you now treat yourself to the programs on Building Your Wealth link down below, because we just started a new coupon code as soon as we hit the 0% on the Fibonacci. And guess what the new coupon is? It is back to the moon, because I think the next 30 days I'm bullish on. This is very, very exciting. And these Apple earnings reaffirm the strength of our consumer. I think we've got so much bad news behind us now. It's not a surprise to me. Stay at home, e-commerce, brokerage revenue like Robinhood. It's not a surprise. We've been talking about that for 3 months. E-commerce, consumer discretionaries, brokerage revenues, fintech. I mean, how many times I've been asked about PayPal, and I know they did well in earnings yesterday, but again, they popped off like a pure basically collapse. But still, how many times we've talked on the channel about together with you in the comments and everything about fintech, about consumer discretionary. It's just heads up. And what's also kind of crazy is one of the things that I said is the consumer discretionary that would get hit last are going to be things like Apple and Tesla. The ones that are probably going to get hit more are going to be the lower income consumer discretionaries, the Nike, the Lululemon, the Under Armour, the things that unfortunately poorer individuals can afford themselves the luxury of, but not all poorer individuals can afford a Tesla or an Apple. And what did Visa tell us? Visa told us that the affluent customers are the ones spending the money. They're the ones keeping spending up. So keep that in mind in your portfolio. It's exactly what we've been talking about. Anyway, thank you so much for being here. And dude, come on, man. 50 basis points is already priced in, bro, man. This is old news. Like putting me to sleep with 50 BP. Like, please tell me something that I haven't heard before, Fed. Like, you got anything else to give us? Because, when you get beat up so much, it's just like, really? That's what's left of your punch. You J-Pow, you getting a little weak there with the hands. You need to take a little nappy doodle.